Hi there, it's time to do a Wyckoff check on PYTH price and see where it's going. If you're new to my sessions, these are the key items I'll cover during the session. And these are not financial advice, these are for education and research purpose only, and also for discussion with the asset tech community here, including yourself. Let's start with the weekly chart of PYTH. We talked about this paper hands and diamond hands test that has been going on since the decline towards the selling climax, the panic over stage back in April 2025. So it's not a surprise that the price has been bouncing around below the 0.19 orange key level, because that was the trading range top set by the automatic rally. Okay, what it is doing now is that is taking a U-turn from the very deep test close to the point October 10th, the day of the tariff announcement, tested or set. That was around 0.046886. Currently, the bulls and the bears are fighting between these two price levels. One at around 0.067. The upper one is 0.075, roughly. Okay, so in Wyckoff terms, sometimes we call this kind of very deep level test a spring if it comes after a sign of strength, meaning you see price advancement with volume. All right, that's very clear over there. That's the name of the test. And subsequently, if it comes to like a price surge towards the new distribution cycle, that pretty much set in stone that this is a spring. Right now, it's still too early to tell, because in some cases, there can be multiple signs of strengths. Keep testing until the point the whales are happy to push the price up. All right, so that's the big picture. What we hope to see next is something like what happened back in the sign of strength. All right, you can call that another sign of strength. Remember, white candlestick, long white volume bar. What we don't want to see is something like this over here, the long wick. That means clear hammering by the bears. Last time when they did it, when the bulls tried to push the price above the yellow key level of 26 cents, they got heavily hammered, and that's where the decline started to happen. Okay, that's the story. That's the battleground. Now let's look at the daily chart. The price is still trading within this downtrend that started sometime in late August last year. Okay, even before the October 10th, way before the October 10th tariff announcement. And it continued to trade at the weaker half of the downtrend all the way till end of December last year. And currently it is continuing its strength along the stronger half of the channel. If it successfully, or if the bulls successfully maintain this momentum, you see this tall volume bar over there, right? But the price didn't surge that much. There may be quite a number of people selling at that point. Maybe they have bought the dip somewhere and it dipped lower. Those paper hands, seeing the price going back up, they are already taking profit. So the key is that the price stays above this line of 0.067 roughly. Okay, if that happens, if the bulls maintain the momentum successfully, by 26th of Jan, somewhere around or before that date, along this line, we'll get a confirmation when the price trades towards this triangle, because either the bulls have to give up and let the price continue with the downtrend, or the bears are going to let them go, and the price at least exited the downtrend and trade sideways, if not upwards. Alright? Of course, if they successfully get a momentum earlier for the bulls, we don't have to wait till 26. In less than 10 days time, they can push it outside of the channel already. Alright, so that's the full story of PYTH. If you want to get early access by 48 hours to these sessions, than the others. Feel free to join the channel membership. Thanks for joining me. That's all for now. See you in another session.